Welcome back to Fast Market on the Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our cash tag segment. For that, we want to bring in our next guest, and that is Andy Swan, co-founder of LikeFolio. Taking a look at the trade desk. The shares are under pressure today. The trade desk has had a difficult year to date in terms of performance. The stock is down more than 50%. What does your data show now, especially when you think about how traffic looks like, Andy?
It's really disappointing. You know, the trade desk should be absolutely thriving as ad dollars flow from traditional TV to streaming, but instead, like you said, we've got the stock down over 50%. The real problem is that the ad boom is happening, but it's being captured by closed ecosystems like YouTube and Prime Video, not the open internet where TTD operates. And so when we look at web visits versus stock price, and web engagement for TTD has been very indicative of advertiser activity. That's down 18% year over year. It's really flatlining even as the stock is sliding. And so advertiser interest has stalled, and until we see that turn up, we're not going to probably be getting very bullish on TTD anytime soon. The other thing I think that it's really interesting to look at is, like I said, these closed ecosystems, YouTube, Prime Video, that is where people are going. You know, streaming now is 46% of total viewing time. It's enormous. It's growing. Everybody agrees that's the trend where all the eyeballs are going. But YouTube and Prime Video continue to capture and gobble up more and more share and lock providers like the trade desk out. Even though that, you know, I think the trade desk has superior technology, can deliver superior ROI to its advertisers. If they're not in the system, in the ecosystem, then they can't prove that victory. And so that's what's troubling about where the trade desk is now. We'll have to watch and see, but right now, no signs of a big turnaround.
Yeah, Andy, we talked about that last year when TTD was doing well, and the comparables are starting to become difficult for this company just due to the political ad sales that they had throughout 2024. But if you saw their growth rate, revenue growth rates were 19% last quarter. That's down from 25% in the first quarter, and they guided for 14% growth. And you're seeing competition in this. Netflix is starting to ramp up their DSP, and then you've got Amazon in there also. They still work with some of the big names, but it seems like advertising has become a hot commodity for, you know, these big tech companies and these big hyperscalers. Yeah. Is that going to be the continued issue for TTD when you might use somebody that's bigger that might have a better product or comparable product?
Yeah, you know, marketers, they love ROI, but what a lot of marketers love even more of that is hitting the easy button. And Google, Meta, Amazon, and Netflix all run closed DSPs that give marketers access to an enormous audience really simply and really easily. And so even if the trade desk can deliver superior ROI on a per impression, you know, kind of campaign, it doesn't matter because all of the eyeballs are inside of the Google, Meta, Amazon, and Netflix ecosystem. So they're kind of locked out of the game, right? 6 to 12 months, they're going to have to do something, some partnership. They're going to have to find a way to break into these ecosystems and deliver that value through partnerships. So great technology, great platform, great company that executes really, really well. It's just the behemoths of the industry that have all the eyeballs are kind of keeping them at arm's length.
Oh, that's a great point that you made about partnerships because, you know, Tom was making that point earlier. You're seeing these conversations about partnership after partnership and who's tying up with who. And so that there could be a potential solution. Is that where you could see some potential, you know, hidden upside or optionality if the trade desk had, announced something like that?
Yeah, absolutely. I think that, you know, and at some point they become an acquisition target as well. With the stock cut more than in half, somebody probably really likes that technology and wouldn't mind putting it into their own closed ecosystem. So both of those are possibilities. I think a partnership would really wake up the stock. If we get it much lower, I think this becomes a little bit of an asymmetric opportunity, upside versus downside risk. Because again, this is best of breed in the category that they're in. It's just a tough category right now.
Andy, if you take a look at this, the partnerships that we mentioned, that's part of what's going on with the trade desk. They've got some new products coming out, Audience Anywhere and Open Ads release. But at the same time, if you look at this, in your one chart that shows streaming gaining ground on everything else, do you expect that to continue? That actually might open up some more avenues for the trade desk, or firms that don't want to use maybe the big ones like Amazon and Netflix as they expand their offerings?
Yeah, I think that's a great point. We definitely expect streaming to continue to eat up more of the pie and to grow the pie. These videos are very addictive, as all of us know. You can end up spending an hour or two watching videos on a screen that you didn't even mean to turn on sometimes. So I think that pie continues to grow. And then, with the trade desk, it could be that the first money, the easy money flows into Google, Netflix, Amazon by default. And then as these advertisers start to say, we're going to continue shifting more and more ad dollars to these streaming platforms, then they move, that secondary money into the trade desk type of ecosystem. So I think that they can benefit in multiple ways from the move to streaming. It's just been frustrating for them to be locked out early on from the big players.
Andy, let me ask you this. Have you seen a divergence at all between, what consumer demand looks like and what ad budgets look like that could, either foretell of more weakness for the trade desk or potential strength?
Yeah, everything that we see continues to show consumer demand, consumer eyeballs to streaming. We continue to see that growing. And also much higher ROIs on these ad dollars than traditional. And I think it just takes marketers, it takes these enormous marketing budgets, time to shift to where those eyeballs are and where that ROI is. And so, again, I think that there's enormous opportunity for the trade desk, that they just have to get into the game a little more. And I'm sure they're trying, but they have a great product. And at some point, this stock becomes a must buy. It's just not there yet.
Certainly seems to be the case now. Under more pressure, down 2%. We started the segment, it was down 1.5%, now down 2%. All right, thank you, Andy. That is Andy Swan, co-founder of LikeFolio. Okay, now we got to get to the trading perspective on all things.